Hello, Professor. I hope you are doing well. My name is Mehtad, and today I will be presenting on Toyota's 2025 Global Bond Issuances, financing the future of mobility. I will cover Toyota's two major bond issuances in July and September 2025, explain why they matter, and highlight what they teach us about how global capital markets work in practice. This is the outline slide, and here's what's going on. Between July and September 2025, Toyota raised $3.5 billion in the US capital markets. In July, Toyota Motor Corporation in Japan issued 1.5 billion of sustainability bonds in the Yankee bond market. In September, Toyota Motor Credit Corporation, Toyota's US subsidiary, issued $2 billion in conventional bonds, a mix of fixed rate and floating rate tranches. The purpose was twofold. One, to fund Toyota sustainability and innovation projects like electronic vehicles, hydrogen fuel cell, and Woven City, a smart city. And the second, to support its US financing arm that provides loans and leases for Toyota and Lexus customers. In short, Toyota used global markets to fund both its future transformation and its day-to-day operations. To answer the question why bond in 2025, I can say capital needs for sure for EV transition, autonomous driving, and a smart city like Woven City project. Diversification, of course, for reducing the risk. A strategic timing to tap different currencies like USD. Favorable market condition, strengthen liquidity ahead of global uncertainties like pandemic and others. And Toyota is the world's largest automaker, producing nearly 10 million vehicles annually. But today, Toyota is transforming itself from just an automaker into a mobility company. Its strategy focuses on electronic vehicles, hydrogen fuel cell technology, autonomous driving, and Woven City, a prototype a smart city in Japan, designed to test next generation mobility. Toyota carries strong investment grading ratings, A1 from Moody's and A plus from S&P, and has a stable revenue base. But achieving carbon neutrality by 2050 and catching up in EVs requires enormous capital. That's why global bond markets are essential to Toyota's strategy. To enable ESG-focused funding, Toyota established the Woven Planet Sustainability Bond Framework in 2021, aligned with ICMA's Green and Social Bond Principles. Eligible projects include clean transportation, battery EVs or BEVs, and hydrogen fuel cell vehicles, safety and assisted mobility, such as Toyota safety sense systems and wheel cap vehicles for disabled or elderly people, carbon neutral factories and renewable energy projects like Woven City. The framework is reviewed by Moody's ESG Solutions, giving investors assurance that proceeds are truly sustainability aligned. This framework set the stage for the July 2025 sustainability bond issuance. In July 2025, Toyota Motor Corporation issued $1.5 billion in Yankee sustainability bonds across three tranches: a 2-year note at 4.186%, a 5-year note at 4.450%, and a 10-year note at 5.053%. These priced at a spread of just 38 to 77 basis points above the US Treasuries is very tight in a high rate environment. All were rated A plus and A1. Because the issuer was Toyota Motor Corporation in Japan, this was a truly Yankee bond, a foreign company issuing US dollar debt in the US market. Investor demand was strong. Books were likely oversubscribed, likely around 4 times. Importantly, the bonds priced with no new concession, showing investors were eager to own Toyota's debt. The proceeds are earmarked for EV and hydrogen vehicle R&D, advanced safety technology, renewable energies, and Toyota's Woven City project. These July bonds were Toyota's largest sustainability issuance ever. They highlight how global ESG investors like willing to fund Toyota's transition often accepting slightly lower yields, what's called the greenium effect. They also gave Toyota dedicated funding to accelerate its competitive push against Tesla and other EV leaders like Honda, Lucid, and others. In short, this deal demonstrates how international bond markets can directly finance corporate transformation. In September, Toyota's US finance subsidiary, Toyota Motor Credit Corporation, issued $2 billion in bonds. This deal had three tranches: a 3-year fixed note at 4.05%, a 3-year floating rate note at overnight financing rate plus 72 basis points, and a 7-year fixed note at 4.65%, all were rated A1 and A+. The proceeds funded TMCC's core activities like loans, leases, and dealer financing in the US. This is how Toyota ensures customers worldwide can finance Toyota and Lexus vehicles. Technically, because TMCC is a US incorporated entity, these are domestic US corporate bonds rather than Yankee bonds. But in practice, they serve the same purpose, tapping the US capital market as of Toyota's global funding strategy. So I put it here as an international. These September bonds matter for several reasons. First, they demonstrate Toyota's global market access. Raising $2 billion in a single deal is possibly only for highly rated issuers like Toyota. Second, the floating rate tranche was strategic. It appealed to investors hedging against rate risk, while also diversifying Toyota's funding mix. Third, the bonds were oversubscribed and priced with minimal concessions, proving that investors are willing to lend at tight spreads thanks to Toyota's credit quality. This is a clear example of cross-border capital flows, US investors funding Toyota's global business. To put this in context, in mid-2025, interest rates were at their highest in more than a decade. The US 10-year yield was over 4.5%. Despite this, demand for high-quality corporates like Toyota remained very strong. ESG bonds were now mainstream. Toyota's July deal was one of the largest Yankee ESG bonds ever issued by an automaker. At the same time, competitors like Honda were also tapping the bond market. And Toyota's financials were solid with revenue growth and a strong balance sheet. That's why investor has confidence to buy Toyota's bonds. And so the major takeaways are Toyota raised $3.5 billion in just 3 months through global capital markets. It executed a balanced strategy, sustainability bonds for innovation, and TMCC bonds for its day-to-day operations. Investor demand was robust with oversubscription and tight spreads, as we saw it. And these deals illustrate key international finance concepts like cross-border flows, ESG financing, and interest rate risk management. This is a textbook example of how global capital market supports corporate strategy. And these are the executive summary. To wrap up, Toyota executed 2 major bond deals in July and September 2025, raising a combined $3.5 billion. The purpose were to find EVs, hydrogen fuel cell, woven city, and to support TMCC's lending operations. Investor reception was strong, oversubscribed. Priced tightly, showing deep trust in Toyota's credit. The strategic impact where these funds helped Toyota shift from an automaker to mobility company and achieve long-term sustainability. And the broader lessons were global capital markets are not abstract, that they directly fuel corporate transformation and sustainability initiatives. Thank you, Professor.